Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everyone, I am Jeremy Mullen. Welcome to today's top stock pick. Nino will be right after me, but first I will be doing Carvana, ticker symbol CVNA. The stock is a Zacks ranked number one strong buy, and the company it operates an e-commerce platform for buying and selling used cars. The company has an end-to-end business model that has transformed traditional used car sales, and the stock has been one of the hottest this year. It was on fire over the summer after some impressive earnings numbers created a short squeeze, lifting the stock from under $10 to a high of $57. Now, it has pulled back significantly. There's been, market selling off. Interest rates are high. That's not good for their customers who are trying to get loans for cars. So I wanted to look at this stock after this large pullback and ahead of earnings, which are on Thursday on the 2nd. 50% pullback, earnings coming up. I think there might be some opportunity here. So let's dig into this one. Looking at the profile page I have up, you can see the Zacks number ranked number one strong buy here. Growth style score, we have an A. That is good. D in value though. So the bulls and the bears are fighting over what's important here. That's why the stock is so volatile. The bulls are hoping for improving earnings, for growth on earnings, while the bears say, no. It's too overvalued. The stock does not belong up here. Looking at what it's worth, we have $5.4 billion market cap. You can see the earnings are on the 2nd here. The PE is not available because we have negative earnings. So that's a problem. That's why the bears point to valuation as a concern. Now, I want you to also look at the beta, 3.1. This is significantly higher than most stocks. This is 3 times as volatile as the overall market. So those of you who have a tough time with large moves, this might not be the stock for you. Okay, let's look at the previous earnings here and what's happened in the past. You can see that before COVID, the stock was having trouble on earnings, but it was going higher. And then we had the COVID crash, and then the subsequent tailwind of people buying cars online, and the stock went through the roof. But when that tailwind stopped, obviously earnings fell apart, and so did the stock, and it was left for dead at the end of 2022. But then the management did a good job of turning things around and started to beat on earnings. You can see the 57% earnings beat, and then a 20% earnings beat, and the latest one of 51%. And what happened was, hedge funds got really short this stock big time. And when he started beating these earnings, new buyers came in and the hedge funds got ran out and it created a short squeeze. So my thinking is ahead of this earnings after this pullback that there might be one more opportunity to get long this stock and see if we get a nice bounce to take advantage of. So we're going to look at the estimates in a bit, but one of the things that really caught my eye is a few weeks after earnings, Carvana raised its Q3 adjusted EBITDA to $75 million versus the $45 million expected. Management noted that early momentum in the quarter, and they were citing strong execution and fundamental gains in retail and wholesale GPU. Despite this guide, the stock has been bleeding lower. It's just that overall market sentiment has just been so weak. And but with earnings coming up, if they can beat, this stock can make a run higher. So let's look at those analyst estimates. We can see here over the last 90 days, they're all ticking higher across the board. And when you look at the agreement, we see everybody is raising estimates over the last 60 days. We have a couple guys who are doing it over the last 30 days. So looking at the current quarter, it's a 11% move higher. We have a 15% for next quarter, 11% for the current year, and a 13% raise in numbers for next year. So we're focused on this current quarter. We want to see earnings beat. And there was a recent preview that I read out of William Blair. They were out with a real positive note for the print. They see a 5% sequential increase to roughly 80,000 cars, about 3,000 cars ahead of consensus and above guidance for units sold, similar to this second quarter. Now, if they do hit those numbers, it probably beat that headline print. However, the firm does maintain its market performance based on valuation. So you can see, even though they're bullish on the quarter, they are concerned about that valuation. So they don't necessarily think the stock could, race higher back to those highs seen earlier in the year. Now let's look at the chart. We want to look and see what might happen if the stock does beat earnings here. Close this. So I want to show you going back all the way to 2019 to put this in movement perspective, right? So we had the move from COVID to highs and all the way back down. This looks like a little blip in here, right? Can't even tell what's going on. So let's get rid of this and maximize the sell here and zoom in. So what I have drawn up is a Fibonacci retracement from lows to highs. You guys who follow me know I love this. We pull back into a 61.8% retrace, lined up with the 200-day. That's a lot of technical support right there. So what I'm seeing as we head into earnings is a stock that's coming into a lot of technical support. And if we can get a beat on Thursday, what we'll see is a snapback move, possibly to this 21-day moving average. So that's a nice little gain. That's $28 to $34. You're talking about, 15 to 20% in there, a possible move if you can get up to that area. And even if we get another really impressive earning, perhaps we'll get a squeeze back up to the 50-day moving average. And so that would be a really nice trade if we got something like that. Below the 200-day, we have problems. So perhaps address this with calls instead of the straight up equity. I would suggest in the money call option as the way to attack this trade. For you longer term investors, if this does play out and we break above that 50-day moving average, hit those highs, I would look for way up here. The valuation story probably doesn't justify a move up here, but that's what I have in for my targets on this chart. So that is it. And look out for earnings after the market close on Thursday to see if these guys can beat and take the stock back up over 30. Okay, that's it for me and Carvana. I think they can beat. I think the stock can get back over 30, maybe even 35 to 40. So look out for earnings after the market close on Thursday. And here is Nina with her pick.
Thanks, Jeremy. I'm Nina Mishra, and my pick today is Palo Alto Networks. And this is a global cybersecurity leader. And I have chosen a cybersecurity company because I'm bullish on this space and on this company in particular, because unfortunately, our world is becoming a more dangerous place, and with the rise of geopolitical tensions amid Israel-Hamas war and Russia-Ukraine war and China-Taiwan tensions. So because of all those factors, the risks, cyber attacks, and then cybersecurity threats continue to rise. And we have seen a lot of focus on artificial intelligence this year, but AI and cybersecurity, these are complementary technologies. AI is a very powerful tool which can be used to improve cybersecurity, but at the same time, it can also be used by bad actors to launch attacks and create deepfakes, etc. So there is rising need for cybersecurity, and this is an area which companies cannot ignore. So even if the economy slows down significantly, which many experts expect, the corporate spending on cybersecurity will continue to go up. Now, let's take a look at Palo Alto Networks by going to the quote page on Zacks.com. So this is a Zacks rank number 1, strong buy stock currently, and it is also in the top 25% of Zacks industry. So a good industry rank. F for value, but B for growth. We'll talk a little bit about value later. So the company reported results which were ahead of analysts' estimates, and in fact, there was a lot of confusion around their results because the company scheduled their results on a Friday after market close. So many analysts were expecting that maybe there's some bad news in the results. So stock initially fell after they scheduled that report. And then when they reported, the results were actually ahead of estimates. And in fact, earnings were significantly ahead of estimates. You see the surprise there. And that is why that analysts raised their estimates for the company. And those rising estimates have sent the stock up. Now, looking at the results here, this is from the company's investor presentation. You will see significant growth in total revenues, significant growth in operating margins, and guidance was also ahead of analyst estimates. Now, going back to the stock and its longer term beat history, if you look at price consensus and EPS surprise chart, you will see that the company has not missed even once in the last 5 years. So all greens, that's an excellent record. Now, the stock, because F for value, it is because the stock is not cheap. It is trading at a forward P of almost 45 times. Year to date, the stock is up more than 70%, but it is still off from its recent highs. Now, so it is off from recent highs because these stocks, technology stocks in particular, they have sold off in the past few weeks on concerns that interest rates will stay higher for longer. And cybersecurity stocks, the space saw some sell-off due to war in Israel, because many cybersecurity companies are based in Israel. Israel is a cybersecurity leader. So Palo Alto Networks has also acquired some companies in the past which are based in Israel. So that is another reason why these stocks saw some sell-off. So I believe this stock has a lot of growth potential. You see that EPS growth rate of almost 28% over the next 3 to 5 years, and rising need for cybersecurity in general. I think this stock will continue to benefit, and it is a buy or any dip. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our YouTube video channel so that you do not miss anything, and we will see you next week.